Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And the first place for me to start is by asking everybody how they are feeling. I'm sure slightly better than what the emotions were yesterday, and we made sure to come out with not just one, but two daily market updates yesterday to keep everybody as level-headed as possible in what was a very tumultuous time for the markets. And it is our assessment, our opinion, that really yesterday was a growth scare on the back end of Friday's non-farm payroll numbers, causing a readjustment in regards to a repricing of the probabilities of a recession. I don't think a recession is coming, by the way, but I think the chances of it with non-farm payrolls actually increased. And of course, unemployment probably more so than non-farm payroll report. And then you had that compounded by the unwinding of the yen carry trade. We're going to be starting the video off by explaining that in a little bit more detail. We've explained a lot the kind of ramifications of Friday's non-farm payroll number. It shows a weakening labour market. In regards to that, there was a lot of sort of things going on with that non-farm payroll. There was a lot of revisions that kind of compounded into that number being as low as it was. And there was a lot of kind of issues in regards to America, whether that be hurricanes, whether that be whatever it is, that sort of lowered that number to what it was. I think if that improves, you're going to get people allocating back on in regards to risk. Unfortunately, in all of this, crypto just finds itself as a paper bag in the wind because it's just going to get beaten up the most in what is a brutal environment, or certainly a brutal day. But we're seeing a recovery on the back end of that, and that's ultimately what I think things is going to happen. When you assess the macro situation, it's really not a bad picture. I think we had that kind of compounding of everything, and then you're going to get that spike up the other way. The VIX, for example, spiked to levels that we've seen in 2008 and obviously March 2020. And we saw more liquidations or more sort of capitulation from short-term holders than we did in FTX. It's not warranted, and the price doesn't reflect that. So yes, the likes of the Nikkei definitely crashed. I think it was the worst day in history for the Nikkei. However, when you look at markets more broadly, it's a pullback. Even Bitcoin, yes, altcoins got hit, but they're still in this kind of accumulation base, ready for what is going to be a spectacular upside, which we still think is to come despite this. The big question you've got to ask and answer is, are we heading into a recession in the next 2 or 3 months? If not, you're long the markets, because the S&P will rally up until 2 months of a recession. We think we have a period of opportunity that leads into the back end of 2025. And we get that from looking at a number of things. But to stick to the topic at hand, yesterday, of course, you had the unwinding of the yen trade. So to sort of bring some charts in here and really sort of summarize this, because if this is the main factor in regards to why markets sold off, you really don't have too much to worry about. So the Japanese, or the Bank of Japan, upped interest rates for the first time in 30 years, okay? Now, this has bolstered the yen, which typically has had a low interest rate, which all the carry trade means is people have borrowed yen at no interest rate and they've put it into other assets. So we've been one of the few people to say and to kind of correctly identify that the Nikkei is a short yen trade. All stock markets in one sense or another are a short currency trade, but the Nikkei more so with their interest rates at zero. So you could borrow for nothing and put it into something that's going up against that asset. And when you had that interest rate rise, that's seen the yen gain strength, which means people have had to de-risk, in some cases get liquidated, because the carry trade means they've carried the yen over, for example, to buy dollars, and then probably to buy stocks. And with that adjustment, they've had to liquidate some of those positions. So there's been a lot of market contagion, with the Nikkei being the big sort of yen carry trade, most notably in the Nikkei. The Nikkei is even recovering a little bit today. I think this is just a sharp sort of stab to the downside, guys. I really do, and I think you're going to come out the other side of it. We have said we need to see the dust settle a little bit, because it's our assessment that this absolutely isn't us now falling into a recession. You did have the yield curve uninvert just slightly yesterday. It's back down a little bit. It is just a massive overreaction is what I think really happened yesterday. So to round things up and really put a capstone on that, Friday's non-farm payroll numbers caused a increased probability of recession based on a weakening labour market. People have readjusted as a result of that. It happened on Friday, going over into the weekend. People are holding that risk, looking to deleverage on a Monday. On top of that, you had the ramifications or the compounding of the carry trade for the yen unwinding. And that's caused contagion. It's caused fear. And crypto, unfortunately, is that puny kid in the room that's just going to get pummeled by the bully, which is the kind of uncertainty in regards to the macro markets. And that's really what's happening. There's a lot more going on in the FX route. We're going to talk a little bit about FX because the dollar's going in the perfect direction, the direction we've been assessing that it was going to go in. A weakening Dixie eases financial conditions, which ultimately should see risk do well. It aligns with global liquidity cycles, PMI cycles. Yes, we had a downtick in PMI. We had ISM servicing yesterday, which came out of that recession zone. So we had data that confirms that we're not going into recession yesterday. And then you've got things like USM2 that we're going to talk about, global liquidity from a number of things, reverse repo. We'll talk about a lot in this video. But to sort of come into Bitcoin, when we take that, and this is what my stance for you guys, we've made a number of promises to you guys. One of them is that we'll do our best to help everybody make it through this market and do well as a result of it. We don't offer financial advice here. We offer our opinion, and hopefully people can use that to make their own informed decisions on the markets and do well as a result of it. And if you look at the fact that we only started buying crypto here, for Bitcoin, great. For altcoins, it's been a lot more choppy and sideways, but it's just given us longer to accumulate in the broader scheme of things. The best days are still ahead of us. We still yet to see Bitcoin dominance rolling. We'll do videos on this, but I want to just kind of, again, look at everything that's going on and really just reassure, perhaps not the right word, but explain what's going on. The one thing that I can't explain is why Lockheed Martin's doing as well as it's doing. That's the one thing that, okay, we'll keep an eye on that. Because that's typically a sign of geopolitical tensions. There's a lot going on, even in the UK, in my own country. Again, as somebody that grew up in probably one of the most multicultural areas in Britain, literally, I grew up alongside everybody, and it's very, let's use the word interesting to see how they're turning one against the other now, and what it's all for. They want this reaction that we're seeing in the UK so that they can bring in measures. We've already seen them threaten to go after people that have an opinion on social media. Anyway, for another video, we've got to get that second channel up, guys. We're just so busy at the moment. When you look at Bitcoin, this is just a pullback in what is a broader uptrend, in my opinion. Pullbacks are descending, not ascending. We've not seen topping structure. I ultimately think this is just going to result in a broadening channel that you're going to break to the upside of. We've still got that 150k target, 151k target. People looking at an inverse or a cup and handle here. We've still got this head and shoulders that hasn't been validated. We did have head and shoulders on the total 2. Could still be, but at this point, it's looking a lot less likely because of how you broke down here and you've really invalidated this left shoulder. However, if you come back strongly and take this, then it could still be on. We still think the crypto market is in good standing generally. We've got certainly myself, I loaded up probably most notably yesterday on a specific crypto miner, which you can find if you join the Patreon. Obviously, the crypto products still in good standing, in my opinion. This is a daily time frame, so this is why it looks a little bit skewed. Major drop for these, but I think when you look at the broader context, they'll still go on and make their targets. A lot of them didn't even invalidate their left shoulders. But it was a major drop by all accounts. And then when you look at sort of some of the altcoins, they're really just still in this kind of accumulation. Chainlink got hit particularly hard. Something like HBAR really just back in this sort of accumulation. Didn't go on and put in a new low. Anyway, enough for the altcoin market. This is really about the broad macro. So I think you've got this kind of readjusting, deleveraging taking place. And of course, crypto's got pummeled as a result of it. But when you look at the likes of the stock market, for example, is this just a pullback? You can see the kind of deleveraging shock taking place in regards to this gap here. I don't think it's warranted. I think it's just a sudden thing that sort of it's really a growth slash yen carry trade unwinding that's taken place. And if it has a lot to do with the yen unwinding and the Nikkei, that's good. We want that. Okay, it's a shock. It's a short shock, but really it doesn't affect the US and the broad scope of things. And when we look at where we're heading, it's likely that financial conditions are going to be pretty well. It's interesting how the DAX selling off around our target. If you look at the Dow Jones Industrial, that literally also sold off around our target. You can see how target was made here. Sell off. I think we're going to see a sharp recovery. Certainly going into the back end this year, I think things are going to get rocking and rolling. Did gold really get people calling for a crash, black swan, all of these kind of things, which is why this channel is important, because we said be careful of the news, because it will be overly zealous towards the one side. And when we look at sort of macro conditions, so no markets other than the Nikkei really crashed. Okay, you can argue crypto, by all accounts, if the moves we saw for crypto happened elsewhere, you would say that was a crash. But this is crypto. It's actually not out the realms of normality, which sounds crazy. And I know we're going to annoy some people by saying that. But in regards to the Dixie, we've obviously got this broader kind of view on it, but it comes down to the lower band of this channel that we've been in since 2008. We all know what happened in 2008. We have triggered to the downside. This should theoretically be good for risk. But what there is this kind of, like when a volcano erupts, and the volcano in this case is the Dixie coming in the direction we want it, and kind of liquidity coming forth from it, there's volatility as a result of it. And I think it's that kind of initial breaking or turning in the right direction that's kind of spooked things. But if you just look at, and we continue to reiterate this, Dixie coming down should see risk do well, and it is going to be coming down in our opinion. But there's been this kind of spanner that's been thrown in the works in the short term with the yen unwinding. This kind of growing pains is what we'll call it. When we look at things like USM2, this is also starting to increase. So we'll put Bitcoin, SPY, gold back on. This should go with, or typically does follow. Conditions generally are good. It's just, I think we've had this kind of growth scare that comes on the back end of Friday, people readjusting for recession, and then obviously the yen carry trade being sort of null and void. So they're about to, the interesting thing is with a fear right now is they're about to actually really start easing financial conditions, which should see markets do well. It aligns with global liquidity and everything else. I do think the Fed's about to start adding to their balance sheet, and they are literally going to pivot at this point. If you look at the Fed Watch tool, which I'm going to pull up now, it's very likely, we've seen the probabilities now go from, they're going to do a 2.5 quarter of a basis point in the next meeting in September to now they're going to do 50. And this is historically the case with when the Fed will go into easing cycles, they do it in a very aggressive manner. They don't do it in a measured approach. It often comes off very fast. Of course, you've also got fears in regards to that and the idiosyncrasy there that every time the Fed lower interest rates, the market crash. That's not actually the case. We have shown that previously. The data doesn't lie, or the charts don't lie. So a lot going on. Just some interesting information. Short-term holders puked out so many coins yesterday. They locked in losses at a similar scale to when FTX collapsed. Now, after FTX collapsed is when we actually got back into the market. And that was actually a perfect time for us. And it's often a good time, I think, to enter a market when you've had a real capitulation take place, because it kind of exhausts or exacerbates sell pressure. And sometimes in order for a market to go up, it needs to go down first. And I think actually yesterday's events, when you compound everything that we're looking at, is really just going to come out to be a shock to the market. A great buying opportunity, not financial advice. The main thing I bought yesterday was actually a very small crypto miner that we think can go to $313. I think some of the patrons I know got it for sub 10. So do become a patron and find out what they are and unlock my entire portfolio. I think yesterday actually in hindsight is going to be an opportunity, just like March 2020 was an opportunity. I don't think it was on the same scale. We can find out why what happened took place, and as long as we can explain things, we can go from there. And the broad context of the markets, I think, is very much still intact, and we've got a great time ahead of us. And for altcoins, yes, they got hit hard. Yes, it's crap. You're having to deal with a lot of volatility. But in the broader scope of things, they will be coming out of this kind of accumulation base that many of them are in. They've had that first attempt at it. They've had a really steep pullback, ready to load up. And this might have been the catalyst for essentially sending everything. So that's it from me, ladies and gentlemen. I hope you enjoyed this content as much as I enjoyed delivering it. On that note, I'm going to love and leave you. Don't forget to like, comment, and subscribe. And I'll see you all in the next one.